Investing can seem complicated and risky, especially if you're just getting started. But I promise it's easy to start slowly and without taking too much risk. This video will review 5 tips to be a more successful investor based on your financial situation and goals. Hi, I'm Laura Adams, an award-winning personal finance author and Money Girl podcast host with over 43 million downloads. For over a decade, I've helped millions of readers and listeners understand how to manage money and build wealth. Our goal is to offer tips and advice that you can put into action for more financial security and success. So let's review 5 tips for reducing risk and earning more. Number 1 is to purchase a diversified investment portfolio. Buying and selling individual securities or stocks isn't wise for the average investor. That's because no one can predict whether the values will go up or down. A better strategy is investing in one or more diversified funds, which bundle investments, making them convenient to purchase. Funds are made up of hundreds or even thousands of underlying securities, such as stocks, bonds, currencies, and real estate. Diversifying allows you to earn higher average returns while reducing risk. If some securities within a fund lose value, some increase, minimizing potential losses. Number 2 is to understand investment funds. Every investor should be familiar with different types and categories of funds. Here are a few you may see on a typical investing account menu. There are mutual funds. These are a collection of assets managed by a fund professional. Buying and selling shares in a mutual fund are restricted to the end of the trading day when the fund's net asset value gets calculated. There are exchange-traded funds. These are similar to mutual funds in that they are baskets of securities. However, they trade like individual stocks, meaning you can buy or sell ETF shares throughout the day and should expect price fluctuations. Index funds are mutual funds that usually come with low fees and may be made up of thousands of underlying investments. Index funds aim to match or outperform an index like the Standard & Poor's 500 or the Dow Jones Industrial Average. There are target date funds that automatically reset the mix of assets in their portfolio according to your set time frame, such as when you plan to retire. Be aware that funds come with different fees, known as an expense ratio. Generally, choosing low-cost funds like ETFs and index funds is best to avoid unnecessary costs that diminish your returns. Number 3 is to buy funds inside a retirement account. When you purchase investments inside a retirement account like an IRA or a 401k, you accumulate wealth for retirement and get terrific money-saving tax benefits. Workplace retirement accounts are even more valuable if your employer pays matching funds. But even if you don't get employer matching, it's wise to max out your workplace retirement account every year. For 2025, you can contribute up to $23,500 or $31,000 if you're over 50. Plus, everyone with earned income qualifies for an IRA. For 2025, you can contribute up to $7,000 or $8,000 if you're over 50 to a traditional pre-tax IRA. The annual contribution limit is the same for a Roth IRA. However, it has a qualifying income limit. You can open an IRA with many investing platforms. Number 4 is to ignore what you can't control as an investor. Wise investors stay focused on building wealth over the long term using a buy and hold strategy. What happens in the financial markets daily only matters if you have to liquidate investments during that same period. In other words, you should ignore media hype and never make rash decisions like selling investments when their value drops. Your goal should be to get investment growth over decades, not month to month or even year to year. Number 5 is to get professional investment advice when needed. Most investing platforms have advisors to guide you through opening your account and selecting investments based on your goals. To learn more about investing and retirement planning, visit finder.com. Thanks for watching. If you like this video, please subscribe. You'll get notified when there are more helpful product reviews, money tips, and advice.